Hi. Okay, so today we are going to be talking about trading strategies in Forex. So first of all, we'll be talking about the types of trading styles because I don't you got we have different type of trading styles. We have the day trading, we have the scalping, we have the swing trading. Or you just say scalp trading, yeah. So the day trading is a short-term trading with position where positions are open and closed within the same trading day. What it means is that you trade today and you close today. If you enter a position or you enter a trade today, you close today. So the key features of this day trading is trade often lasts minutes to hours, requires constant monitoring and quick decision making. So that's just basically it. The tool is just intraday chart. What do you mean by intraday chart? Is all this 5 minutes chart. You need to be observing the 5 to 15 minutes chart or even 30 minutes chart. But the 5 to 15 minutes is going to be okay for you because it allows you to just stay for some time. Then you're out of the trade. Then swing trading is a medium term trading where positions are held for days to weeks. Yeah, unlike the position trading, day trading, you have to stay in swing trading for you can stay days. In fact, it's self-explanatory. So focus on capturing the key features is focus on capturing a larger price movement. Require less monitoring than day trading. So you don't really need to monitor the trade. All you just need to do is just analyze. Maybe you can analyze today and check again in next few hours because at that time you are using things like daily candle or I say daily candle, daily chart or 4 hours chart. Unlike the other one, scalping is an ultra short term trading focused on small price movements. So basically, what you're just doing is you enter a trade now within minutes to seconds. Look at the key features: trade last seconds to minutes. High frequent trading with your goal is to just make small profits per trade. Once you just make that small profit, you're out. That's scalping. You don't even stay sometimes you don't even stay till 5 minutes left, you are gone. You're out of a trade. You didn't see it. Your tool is a 1 minute to 5 minutes chart. So we'll be talking about risk to reward ratio and stop loss and take profit. So what is risk to reward? Because you be earning very well. Risk to reward compares the ratio compares the potential profits to the potential loss. So it is what it means is okay, what is your loss? What is your profit? You understand? Because as a trader you need to know this thing. So if you're risking, let me say you have a $1,000 account and you are risking $100 out of that $1,000 to potentially earn $300. So what you are risking is what the risk to reward ratio is 1:3. That's just it. Because you are risking $100, which is like what we mean by 1:3 because if you multiply 100 by 3 is 300. So that's what I mean by so your loss if you lose that trade is going to be $100. But if you are to gain in that trade is $300. So if you check the amount, if you calculate it, you see that you are losing one. So I was saying that let's look at this thing now. Imagine that same $1,000 account you have, and then you are losing $200. You understand? And you are not getting $600 profit. You see that if you compare it, if you can do it, 200 times 3 is what? $600. So if you put 200 in three places, you get $600. So that's what they mean by 3. Why you are losing 1? You understand? So recommended ratio is to aim for the at least 1:2 or higher. Don't aim for 1:1. You cannot be losing $100 to gain $100. That's foolish. Anyway, so setting stop loss and take profits. You need to stop stop loss placed below support level for buy trades or above resistance level for sell trades. You know what it means now. So this is resistance level. So you put your stop loss above it. If you enter, let's say you enter here now. So this is where your stop loss is going to be. You understand? Yeah, because you are going this way. Now take profit. Set this next significant support or resistance level. So let's assume that you took market like this at this level here. You put your SL here. This is your next. This is your take profit. You can put it here, or the next significant. So it could be here. You understand? So yeah, that's just it. That's where you take your profits. That's where you put up to get the gain you're going to get. Or use Fibonacci extensions. Yeah, Fibonacci extensions, you can get it. Is a tool in the app. So you just go to your app and you get it. Now, number 3, we are going to be talking about the trend following versus range bound versus reversal strategy. So we have 3 different strategies in forex trading. We have the trend following, that is basically just following the trends. So they say trades in the direction of the prevailing market trend. So if it's an uptrend, you trade in that direction. You understand? So that they are trying to tell you how to follow it. You understand? So you enter a trade where price gets to resistance or support. Let's assume that this is okay, yeah. For a buy trade now, look at this buy trade. They said trade where it's going to get to resistance or support. This first one, you can already see this by this swing low, then a high, and then it came back to this place. This is what I mean by resistance. What this means is that price is turning resistance, the initial resistance, to support. So that what I mean by when enter a buy trade when price gets to resistance. You understand? So this resistance is this place. So price, after it has gone up, came back to this place so that it would act as a support. Now if the price going up, it will not act as a support. You can see when price went up, it came back again and acted as a support. You understand? But then when I say all support, I made sure that I did this video having the both of them in mind. So look at this. Aside from this one that we know that price moves like this, you understand, because this is normal bullish market structure, price will turn this resistance to support, or in a downtrend, price turn this one to this one. There is also another one, which is it actually takes the main support, resistance or support, and this is in this next one here. Look at it here. So price went up higher, and then it came back to this same thing. This is the support I'm talking about. See it came back there. See it. You see it, but it's still making that prevailing trend. So how we move in this is that you take entry from either this side or this side. Understand? So that's how it is in this stuff. Yeah, so I also did it in simplicity. It's simple. See it? It took the low here. This is the support for the uptrend. Came here, took this side here. You see the way market is moving. This is market structure. Look at it. In a higher high. See the way market is doing its stuff. You see it. Let's say this has now changed to a lower low. It's now from a uptrend to a downtrend. So you see it. Market did like this, came down, came to this place again. You see it. So that's just how it is. That's how market move. It moves in those two ways. So the exit is always the next high or low. You understand? So if you enter here, you can take your profit from here, or you can aim high depending on how long the trade is. You understand? So that's just it. So range bound strategy, this trades within horizontal price range, supporting focusing on support and resistance level. As example strategy: buy near support, sell near resistance. I've said this thing before. Exit should be at 50% mark, or resistance or support. This means this. So we know that this is the horizontal line here. This is the horizontal line here. This both of them here. And so, as I said the first time, when you see price, I've already done this. You can sell at this place. You see that? Buy at this place. sell at this place, buy at this place. You understand all those things. Now, but when I said 50% mark, is because the market actually, you can see the middle. If you can be able to use the Fibonacci, you'll be able to get the center of it. You can see the way price is moving at those sides. See market bounce off in that 15% mark. See price bounce off here. See price come here. You see price moving in that place. So price usually come to the 50% mark to also do something. So you can use your Fibonacci, and then you'll be focusing on those two places for price reversals. See here too. So that's just it. Yeah. So you can use this thing, candlestick patterns, to search it out. Now, but let's go to the reversal trading strategies. The reversal trading strategies is in trading involves identifying points where the market trend is likely to change direction, because you will see this thing many times where market is going bullish before and then start going bearish. So you need to know how it works. And the key components to this thing is trend identification. Know where the market is going. You can use trend lines, you can use moving average, but normally you know how to check it. Just need to look at it higher lows. So you look for signs of weakening, of reversals. Let's look for weakening momentum, specific candlestick patterns. You already know the candlestick patterns, reversal candlestick patterns. Once you see them at key levels, you know that price is likely to reverse or is already showing signs of reversals. And what we mean by weakening momentum is like candles can be going like bullish. Oh my, this is too big. So let's just say it's been going bullish. All this while it's just going high. Then at some point the candle start to become smaller and smaller and smaller and smaller. It's a sign of this thing of weakening momentum. That's another one is confirmation. When you see this specific candlestick patterns, you can look for confirmation such as breakout signals to confirm reversals. You will see that later. So the common reversal strategies is the candlestick pattern. I said it. You look for the hammer. You look for that's in a bullish trend reversal. So when you see the hammer, this is here. You see the hammer. Look at the hammer here. After it appeared, what do you see? Price need to reverse. Yeah. So shooting star, same thing. Look at it. It's in a bearish market. The reversal also is going down. When it appears, the engulfing. You can see the engulfing pattern here. Price went there. You can also see it here. See price reversing. So we have the doji. I use the spinning top because all of them are also the same thing. So that's just it. I will not be. I'll just rush through everything. So when you see them at key levels, you know that price wants to reverse. You understand? So support and resistance reversals. So we have talked about this already above. So you monitor price near support and resistance level. So all those things, price bounce off there. You know, at that point you can look for what? Candlestick patterns. You understand? When you see it at that key level, you wait for candlestick patterns. Look at it. Candlestick pattern occurred here. Candlestick pattern occurred here. You understand? See, candlestick patterns occurred here. Here. So that's just it. You can also look for, okay, let me just go to the Fibonacci retracement reversals. So you'll be hearing Fibonacci all the time, probably from top traders, or you'll be hearing it from many people. But because it is a very useful tool for reversal trade levels. Fibonacci level, the level of it is a mathematical like sequence that we use in this trading, because trading is not just happening. It's actually mathematics. It is physics. It is life scenarios. It's just how life works. It has those mathematics, all those things. So price move to trace to like the 38.250 to 61.8. That's major levels that price usually tend to reverse at. So we have the bullish reversal when you get our bearish reversal. So any point you put it and let's say it's in an uptrend now. you can set your Fibonacci maybe from here to here. You now start seeing all those numbers. So you can just come, because majority of traders tend to use 61.8. So price will now, you now wait for price to come to 61.8. You use it as a level. So it's a key level that you're watching out for, and then price will now then reverse from there. You can also look for confirmation, because you need confirmation in this thing. You don't just because you know that 61.8 and say let me enter. No, you would wait for confirmations, and that confirmation can be candlestick patterns or breakout and retest. That is, you'll be getting it now after this one. So the breakout and retest reversal strategy is like this. So approach, wait for price to break a significant support or resistance level. This is actually the greatest proof of a reversal. Yes, to me, it is the greatest proof of a reversal. So we have the bullish reversal, price breaks the resistance, retest it at support, and then continue upward. Let's see what it is trying to say. This is a downtrend, and then they are saying bullish reversal. So price tends to break what? Resistance. This is resistance, and then retest it as what? Support. It's saying that. Then it continues what? Upward. That's what it means. So you see that it breaks that one. Bearish reversal, same thing. It's uptrend, then it breaks what? Support, and then you come back and do what? As break support and come back as resistance, and then goes downward. So you can see both of them. You can see it here. I'll be showing you the two types of ways you can be able to use to identify this reversal. That's the first one is this one. Normally we call it the crouch method, where price breaks this seat here. You can see price breaks it and then comes back and then start going down. Yeah. Or we can also identify this other level. See, we call this normal one that just happened as normal crouch. Sorry, we call this one here crouch, because it just immediately price just from breaking higher highs, price just and breaks the low. You understand? We call it crouch. You understand? It's a change. What crouch means is change in market structure. That's CHOCH. Yes, that's it. So price does that, and then you can see it's reversing. Also, we also have this other one where price, instead of it to break it, so first of all do this lower low first, come like this. It will not break this place, so it will not do like this before it will not. So we will now identify this place as crouch, the official. We call this one the shift in market structure. Both of them are actually shift in market structure, but this is just how you can identify. So instead of you being confused at why the market not just go direct and break that place, why did it have to do like this? This is just how it is. Market is dynamic. It takes different forms and shape and sizes. So this is just how it works. It's not like this is the only method. We also have the chart patterns. We have many things, but this is just what I just want to use, because this is majorly what you need. I'm removing the noise from the market for you to be able to get what you need. So you see something like this failure, or let me just use the uptrend. You see a failure. We call this a failure swing actually, because it failed to break this high, and then it did like this, and then price will now there. You see that? So you'll be seeing it. Let me check the next example. Look at that. Very sweet. The market is moving. It failed to break this place. You see that? It failed to break it. It just came down, and then went up, broke this place. So you can now call it a crouch or something. Broke it, and then so you can just take your entries at points where market has broken structure, because we are talking about breakout and retest. So price would have to break out and then retest. Breakout in the sense that it breaks the support and then turns to resistance. You understand? Or breaks this resistance and turn to support. At that point where the thing breaks it, your entry position will be that place. You wait for the retest. That's for price to come back to that level, and then now enter. now enter the trade to now then follow the reversal. You understand? So what I mean is price breaks this. So what you just need to do is you can set your limit order or just enter at market position. Once price just get to this place, you can just enter your trade, your sell trade, because it has broken this place, this support. So go down. What you just need to do is then you can put your SL here, your TP at the next significant zone. Yeah, you can do that. But you can look for candlestick patterns. You can look for candlestick patterns occurring at this zone here, so that you can be able to maximize your trade. Because there are times when the market will not actually just be just there. It can just move in a little bit, and then for candlestick formation, all those things before you turn them. So have a wonderful day and God bless.